You could just like throw it up on YouTube.
Ah, there we go. All right, we're recording.
Awesome. What up, everyone? Thank you guys so much for jumping on our Tuesday trading call. My name is Darren Fryer. It's a privilege to be here to give you guys some basics and get you guys hooked up with my boy Jonathan Chrysler to my left. I've had the pleasure of knowing Jonathan. We met through Instagram years ago, connected through business, hung out a lot in the Bay Area where he lives. And, he got into trading three years ago or so and started really killing it on his own. And it was incredible seeing his success and becoming an independent trader. I'm not even sure where he learned, through random people and random traders that he's met and connected with online and offline. He's been able to gain the skill set himself. But yeah, it's awesome to have him a part of our IML community, being here to also, help us learn alongside all the other people in the IML platform itself. So yeah, just wanted to say, guys, take some notes. This is the, 101 basics you guys want to know to, be able to start trading on your own, to be able to start copy pasting the swipe trades properly. So I'll just pass it over to Jonathan. Take it away, bro. Appreciate you.
All right. Thank you, Darren and Amy, for giving me the opportunity to share what I know about the Forex markets. This is what I love to do. I'll talk briefly about my background, who I am, why you should listen to what I have to say, even though I'm just this random internet dude. I'll periodically pause and I'll let you guys ask questions, but please wait for me to clarify if it's a good time to ask questions or not so we can make this go as smooth as possible. So my name is Jonathan Chrysler. Like Darren said, I'm 20 years old. I live in California. I'm a college dropout. I barely graduated high school with a 2.4 GPA. School is not my thing. Back when I was in high school, Darren actually introduced me to Forex through this company him and some friends were building at the time. He helped me get MetaTrader 4 set up, introduced me to baby pips, and I've been obsessed with Forex ever since. I'm currently training under the Market Technicians Association to become a chartered market technician. I specialize in quantitative financial research and trading, risk management, applied behavioral finance, and portfolio management, along with 3 years of trading experience, and have tutored over 70 clients in the last year and a half. So that right there is my qualifications for what's going on. So please, I encourage you to ask questions during this call, after this call, because I'm getting it straight from the source of the industry standards, and there's a lot of misconceptions that flow around on the internet. I encourage you to be skeptical of anything that you hear on the internet about trading, because it's full of people who don't know what they're talking about, talking like they do, and that is a very dangerous combination. So I do want to start off with swipe trades, because I do know there's a lot of kind of questions of how to be profitable with that. It's a little confusing at first, but there is a basic system you can follow to profit or not, profit consistently with it. There is no guarantees. Past profits do not guarantee future profits. But I have broken it down into a pretty easy to follow guideline of how to safely use swipe trades. So I'm going to share my screen now. And all right, is it working?
Yeah, it looks perfect, man. I can see it great.
All right. Let's get this view going. View, present, boom. All right, so the first thing we need to talk about is lots. A standard lot 1.00 is equal to 100,000 units. Now, I say units because 100,000 units is not always going to equal exactly $100,000, because we're trading many different currencies in the foreign exchange markets. So for example, if we're trading the pound versus the yen, there's no US dollar in that equation, so it's not going to be exactly $100,000, but it's going to be very, very close. So from standard, we go down to a mini lot, which is 0.10, which is 10,000 units, and then a micro lot, which is 0.01, which is 1,000 units. Now, there are some dangerous nicknames that are commonly used with lot sizes, and I want to confront that and make sure you guys do not use them. First one is the dollar lot. It's commonly referred to as dollar lot. I even said it myself. And then there's also the 10-cent lot, which is the mini lot because it looks like 10 cents. And then the penny lot, because a micro lot looks like a penny. Do not use these. This will skew how you think of your lot sizes and your risk management. 1 cent does not equal a micro lot, which is actually $1,000. So in fact, it's about 100,000 times bigger than a penny. So don't get confused thinking that 1 micro is only costing you 1 penny of your margin, because that's not actually how it works. So another important thing to know, actually, let me pause. Does anyone have any questions about lot sizes? We good?
I think we're good to go.
All right, awesome. So let's talk about your equity versus your margin. I've been asked a lot about the difference between the two and even what equity is, because there's nothing that really says equity on your MetaTrader 4 app. So it's actually really simple to understand. You just have to know the right terminology. So your equity is your deposit plus your profits. So if you open a new account and you deposit $100, your equity is $100. So that is your balance. If you close a trade and you profited $3, your equity is now $103. Pretty straightforward. Margin is a little different. Your margin is your equity times your leverage. So not everyone's going to have the same margin, even if their equity is the same. So some people might have a 50-to-1 leverage, other people might have a 500-to-1 leverage. So it's not always the same. So if your equity is $100 and you have 50-to-1 leverage, your margin is $5,000, which is 100 times 50, which is your leverage. Make sure you use your margin as a supplement, not a drug. Over leverage makes you hemorrhage. You don't want to stress yourself out going, okay, I can technically fit in, this giant trade. If I win, great, my account will be double. But if I lose, my account is gone. Trust me, it's not worth the stress of over leveraging your account. You won't want to wake up in the morning to check your account. It's just going to make you, burst some blood veins. It's going to make you stress out. It's going to make you not want to trade. So remember, use your margin as a supplement, not as a drug.
Quick question, Jonathan.
Yeah.
Amy has a question.
Is that why you recommend us doing a 1-to-50 to 1-to-100 leverage? Because it makes it like we're not able to then over leverage our account, even if we want to?
Exactly. When you have a higher leverage, it entices you to put more money down. Because for example, there are some sketchy brokers out there, and a good way of looking for a sketchy broker is seeing how high of a leverage they offer.
1 to 500. I remember some people had like the 1 to 1,000. I was like,
yeah, exactly. Like they want you to lose your money because they make more money when you lose. So you got to watch out for that. But does that answer your question?
Yeah, it definitely did. So now I have a clear understanding of why we're telling people to do a 1-to-50 or a 1-to-100 leverage.
Awesome.
So everyone, if you have a 1-to-500 leverage and you're not Matt Ellaby, because I know he likes to trade crazy. If you're not Matt and you have over a 1-to-100 leverage, fix that shit. Make it 1-to-50, 1-to-100.
Yeah, and you can do no leverage, but I mean, what's your take on that? It's still good to have some leverage. I mean, if you have no leverage, it's like you'll try to enter trades and it won't even let you enter them. So yeah, I saw Brenton just asked, can you do no leverage?
No leverage? You can, but you're not gonna be able to enter a trade unless you have a lot of money in your account.
Yeah. Okay, cool. Yeah, that makes sense. And then Joe said JAFX has a 1 to 500 leverage. He said, I heard they're sketchy. I've heard some sketchy things about live accounts with JAFX too. What are your thoughts on?
Yeah, so I have an account with them. I do not have much money with them because I'm a little skeptical of them. The reason why they're pretty popular right now is because they offer cryptos, and you have to keep in mind it's still the wild, wild west with cryptos. There's no regulations. No regulated broker is going to offer cryptos safely right now. I think I heard Trading or Trader's Way is integrating cryptos. I haven't heard too much about that, but you want to make sure you're using a regulated broker. And if you're in the US, legally, they can't have leverage above 50-to-1. So that's kind of how you tell if it's secure or not. So yeah, I would really be hesitant to use a broker that has that kind of leverage. You might see people like, Cube, what's his name? Quillen Black.
Yeah, Quillian.
Yeah, like he's a beast. Like if you're on his level, like yeah, you can use crazy leverage because he's just, he knows he's going to win. He has a high percent. He has a high win rate and stuff like that. And he has money to lose too in case his money gets stuck in limbo, which is a common occurrence I heard with JFX.
Okay.
Because your profits can kind of disappear if you're making a withdrawal and it doesn't ever go through. That's some risk you're going to take using an unregulated broker.
Okay, cool. One more thing too. I see Marcos asked, so if you over leverage, does that mean you owe them money? And no, you won't have to owe them money. That just means you will lose all the money you have much quicker, right, Jonathan?
Yeah, if you hit your maximum margin, like you use all it up, it'll just close you out where you are before you're in debt to them.
Yeah, so you'll just lose everything. You'll be at zero. It's called blowing your account. If you have 5,000 in your account and you've over leveraged and your trade goes to minus 5,000, it's like it's closed automatically. It's like a stop loss.
Mm-hmm. Two more quick questions. Sorry. First one is if someone's using JAFX, they can still use a 1 to 50 leverage though, right? As long as they elect it, they just give you the ability to be able to do up to 1 to 500, correct?
Correct. You can typically select what leverage you want when opening a new brokerage account.
Awesome. And what broker do you use? One of my girls asked.
I use Owanda. They're based in Canada and they are US regulated. The highest leverage they offer is 50 to 1. I will say the downsides, if you're in the US, they don't offer gold and oil or silver. They do not offer cryptos. The upside is your money is safe. And that is really the only upside you need when deciding on a broker, in my opinion.
Okay, cool. And one more question from Marcos is, can you change your leverage after you pick your account? So with a live account, you should be able to, yeah?
Depends on your broker. For example, with Owanda, I'm not 100% sure if you can change it when it's already made, but you can make a new sub account and then choose a different leverage. Most brokers offer sub accounts. So you don't have to stress out too much about setting up wrong because you can just make a new sub account and set up the way you want it.
Cool. Awesome, man. I think everyone's got their questions answered. Feel free to keep on the PowerPoint.
Yeah, well, thank you for letting me know when people have questions. I guess I can't really see people's questions when I'm in full screen like this.
Yeah, I'll ask them to you.
This is awesome. This is already so much value, Jonathan. This is so cool.
Awesome. All right, so let's get to the swipe method. This is how you are consistently profitable off swipe trades. And I've seen that swipe trades has been killing it. They brought in, over 1,000 pips last week, that's insane. Usually you get about, 1,000 pips per month or 2 months. So that's just crazy. So first things first, when using swipe trades, if your account is $1,000 or below, 1 micro is the highest you go. Now, I'll say that again. If your account is $1,000 or below, 1 micro is the highest you go.
You'll make that into a song soon, man.
Yeah. For every $100 in equity you have, you may enter 1 micro lot. So that means if you have a $300 account, you may open 3 trades at 1 micro lot at a time. Now, that does not mean you can enter or you should enter 3 micro lots on 1 trade. You want to keep your investments diverse. You don't want to put all your eggs in 1 basket because if that basket gets stomped on, now you have no eggs. Do not enter multiple positions on the same trade if your account is below $1,000. This increases your risk exponentially. I know with swipe trades, they give you, I believe, 3 take profits most of the time. That does not mean you need to enter in 3 trades for it. They're just saying, hey, this is the first projection, this is the second projection, and this is the third projection. We do not expect all 3 to be hit. They're just saying this is the potential for this trade setup. So what I recommend is you use the 3rd take profit and apply a trailing stop loss. And you're probably wondering what a trailing stop loss is. It is one of the most useful tools you will find in Forex. It essentially takes a trade, makes it risk-free, and then turns it into a guaranteed profit when used correctly. So, for example, let's say your trade is up 20 pips. So if you entered one micro lot, that means your trade is up $2. The moment you notice your trade is up $2 with a micro lot, move your stop loss to break even, which means you move it to the same price you entered at. And you can do that If you're using MetaTrader 4 on your phone, you just press down and hold on the trade, and it'll say different things like close, modify, different things like that. You'll hit modify, and it'll bring up your stop loss and take profit. And you can change your stop loss as long as it's below where price currently is, or above, depending if it's a sell. So if it's 20 pips above, you move it to break even. And if it's above 50 pips, then you can move it to 20 pips above your entry, which now moved it from a risk-free trade to a guaranteed profit. This means worst case scenario, you're going to make 20 pips. And that is what you want to do. The trick to being a good trader is to minimize your risk, because we're already trading in one of the riskiest financial markets in existence. So minimizing your risk is how you're going to be a profitable trader instead of just a gambler. And it keeps going up. Once you're up 75 pips, you can move your stop loss to 50 pips above your entry. And once you're 100 pips, you can move it up 75 pips above your entry, and so on and so on and so on. You can play around with what numbers you like. I generally move in these increments. Once you're above 20, I start moving in 25 pip increments. So I go from 50 to 75, from 75 to 100. Then from there, I go to 125, 150. But again, like, that's not a set number. The idea is to minimize the risk and make it so it's a guaranteed profit. All right. And now, if you plan on trading more than $1,000 and have questions about risk management, I suggest you message me in private. Big numbers are the death for a new trader's risk philosophy. I will not discuss big numbers on this webinar because it will make people greedy. It will make you excited, like, oh, well, I will just over leverage my account so I can make these big profits. But the reality is, like, I've been trading 3 years now. And even like some people I've learned from, these people trade, hundreds of thousands of dollars. They still use micro and mini lots, even though they have hundreds of thousands of dollars. You'll see people post like Ryan Lloyd, Quillen Black, like I said, and a few other people, Dimitri Wallace, I think his name is Gold Mines dude. They will post profits of them doing like 10 lots at a time, quick profits. That's one way of doing it, but it's not a realistic way of doing it. I much prefer to follow traders who, even though they have hundreds of thousands of dollars at their disposal, they still trade safely using micros and minis and rarely use standard lots. So let's go back to the $300 example. If you already have 3 trades open and you receive a new swipe trade, do not enter. Just because a new swipe trade comes out does not mean you need to enter it. You need to make sure that you're still using proper risk management, because swipe trades, while it takes out the technical aspect of trading, it still leaves you with risk management, with maintaining a good trading philosophy, and also managing your portfolio. Only trade what you can afford. Leverage is meant to be used but not abused. All right.
So Jonathan, one more question that popped up from Joe. So he said, really, I heard 0.01 for every $100. Explain the difference between pips and micro pips. People get confused. So micro pips is just making pips off of a smaller lot, right? A micro lot.
A micro pip is just 1/10 of a pip. It's just a different measurement. So, okay. 1 pip is still It's
still a pip. Yeah. It's just saying how big how big the size of the trade was.
Yeah, so the size of the trade does not really change how many pips you want to go after. Like, a 100 pip trade with, a micro lot is $10. With a mini, it's 100. Or I guess what he's basically asking is, a micro pip, it's never going to come into play. In fact, most brokers won't even show it. So is the answer to the question? I'm not, because micro pips won't really ever come into the equation typically.
Okay, cool. I think that happened. I mean, one question too, Matthew asked is, what if you move 75 pips, but you break even is on a ceiling, but your break even is on a ceiling? Not quite sure what that question means. So you could probably move forward.
Okay. So we're all clear on kind of the swipe trade method of how many trades you can have open depending on your account size and the lot size. So typically you're not going to go above 1 micro until you have made thousands of dollars. because I guess the biggest number I'll talk is once you get into the $2,000 range, you can think about doing 2 micro lots. And that's the biggest I'm going to talk. And I know that's a little disappointing to some people, but you want this to be a long-term thing. Forex is not a get-rich-quick thing. It's not a get-rich-quick scheme. And it's advertised like that. And I'm in this for longevity. I'm in this for, my family. My children aren't even born yet. So I'm not going to be throwing down 10 standard lots just so I can buy a fancy car to impress people that are not going to matter to me in 10 years. So it's really important to maintain a proper risk management, which is what I want to talk about next, about risk philosophy. So when you have a small account, it's natural to experience scarcity. A trader who analyzes in scarcity will have scarce profits. They think, I need to enter more trades because I do not have enough. And I bet you guys didn't expect to get spiritual on this webinar, but that's the direction we're going here. You have to be satisfied with what's on your plate. I remember starting out, in high school, I was a gymnastics coach. I would just throw in $100 into my account and I just would be like, what is this? Come on. Like I see these guys with tens of thousands of dollars trading like this, this is not enough. And that mentality is what made me blow account after account after account after account. So you need to be satisfied with what you have and not compare yourself to other traders. For example, I do not follow other traders on Instagram because of how flashy they can be. I don't care what car they have. I don't care how nice their house is, because all that's going to do is going to create scarcity in my mind. Like, wow, my car's not as nice as theirs. My house isn't as big as theirs. They're doing bigger lot sizes. And that's kind of tainting the philosophy you should keep, the mentality you need to have to be a successful trader. So I know it's easy to get excited about seeing like, wow, he bought that, BMW M4 with a Forex and his license plate says Forex. Wow. But make sure you need to keep your goals straight. Make sure you have your reasons, your why of what you're doing it for, and not get greedy with it. A trader who analyzes in abundance will have abundant profits. They think to themselves, I'm satisfied with my equity. I do not need to risk my margin for a quick buck. A successful trader invests based on what they see, not what they think. That Jake Coleman is the guy I learned from the most. He keeps really low key. He's kind of like the ideal trader in my eyes. If you look at his Facebook, you don't see any fancy cars. You don't see any big houses. You don't see his profits, because he keeps it humble. And that's kind of how I like to keep going with my trades. I don't like to be flashy, and I don't like to promote that, that form of trading.
Yo, so one thing Joe just said is I heard 20% trade skills, 80% psychology. Thoughts? I mean, that's what I've heard as well. It's like pretty much like that, yeah?
Yeah, I would agree with that. It's one thing to know how to read a chart, and it's another thing to know how to manage an account.
Yeah.
All right. So now we're going to move into a little more technical details. What is an indicator? An indicator is a statistical tool that currency traders use to make judgments about the direction of a pair's price action. Forex indicators come in many types, different flavors, different strains, including leading indicators, lagging indicators, confirming indicators, and so on. Popular indicators include moving averages, relative strength index, and average true range. So this is technical analysis, which is different than price action. So I want to separate the two right there. Technical analysis includes indicators. Price action does not include indicators. Price action is purely price data on the charts. Leading versus lagging. A leading indicator gives a signal before the new trend or reversal occurs. A lagging indicator gives a signal after the trend has started and basically informs you to say, hey buddy, pay attention, the trend started and you're missing the boat. So they're good to use at the same time, because leading indicators are not correct all the time. They give out a lot of fake outs. They'll go, hey, I think a downtrend's about to occur. I think, this trend's going to reverse. And then at the very last second goes, just kidding, we're going up another 100 pips and you just lost a trade. So that's why lagging and leading indicators work in harmony together. So on the topic of leading and lagging indicators, oscillators are pretty much the main source for lagging indicators. An oscillator is a technical analysis tool that is banded between two extreme values and built with the results from a trend indicator for discovering short-term overbought or oversold conditions. Popular example you might use is the MACD, stochastic, ROC. So basically kind of where you see lines drawn on a graph where you can see if it's overbought, oversold. They are probably one of the easier indicators to use in the beginning. And once you have more advanced knowledge, you can actually use them extremely accurately. Before we move on, does anyone have any questions about the introduction to indicators? We're good?
So what's your take on like the harmonic scanner and the web analyzer? Those are types of indicators, like kind of artificial intelligence indicators, right?
Yeah, so the harmonic scanner, that's a price action piece of technology right there, because it's not using any kind of like band. It's not using like a formula or a algorithm to determine its own set of information. It finds different patterns in price data or price patterns. So I prefer that one. That's the one I actually learned to use harmonic, or how I learned to recognize harmonic patterns. Because you will get to the point where you don't need the harmonic scanner anymore. You'll look at the chart. Like I think I was talking to Joe about this because he's kind of the same way. He'll just kind of look at a blank chart and he'll see the pattern. You draw it out and you just see if it matches up. And the way I got there personally was just using the harmonic scanner a lot, because I've had access to it for about 2 years now. Back last time, I was in IML with Darren, so it really helped.
You installed it, yeah. You got it installed.
Yeah, that was a pain to get installed back then, man.
I guess that was the plus, is you got to keep it the whole time, because nowadays people can't just download it and keep it.
Yeah, but man, that thing is rewarding. And then the what was the second one called? I don't use it very often.
Well, the web analyzer, yeah, that's pretty new. I haven't really played around with it yet either.
All right, so the web analyzer, it uses oscillators. In fact, it's almost completely just oscillators. And the purpose of it is for short-term trades. It basically kind of gives you good entry points and potential take profits. The reason why I don't personally use it a lot is because you kind of use it as you use it instead of using your own mind. You kind of go, oh, it spat out a trade, I'm going to take it. The way I would recommend using it is just seeing, trying to figure out why it says certain things. So if it says there's a certain trade here and there's a take profit down here or up here, you should go on a chart, try to figure out why is it saying that, because it's a computer spitting out information in a way a human can see it. So you should take your human brain and try to convert it into how the computer thinks. So I think it's good for kind of pushing in, going out, doing that, figuring out why it says certain thing, instead of using it as I'm not going to think about this. I'm just going to see whatever it spits out and go with that. Because you're going to lose money doing that, because you got to make sure it fits your standards too before you enter a trade.
Cool.
All right. Is that it?
Yeah. Joe asked something. He said leading and lagging. So EMA and SMA, you can detect trends based on crossovers. So I think he was talking about the leading and lagging trend lines.
Yeah, I want to explain. So for SMA, that's simple moving average, and EMA or whatever, that's exponential moving average. So are one of those leading and the other's lagging, or are those both one thing?
So they're together, they're one indicator and they're a lagging indicator together. Because if you notice, they look really similar to an MACD, because that's the same concept.
And then when they have, like, you can do the EMA, what is it, EMA and SMA crossovers, where it would detect a reversal or something like that, right?
Yeah, it's just another trend reversal confirmation. It is a lagging indicator, which means by the time you will recognize a reversal with the moving averages, the reversal has already taken place for a while.
All right, sounds good.
All right. So now we move on to what is volume. I won't go too much in depth about volume because this is more of an advanced topic, but it's a good term to know. Volume is the number of trades in the entire market during a given period of time. For every buyer, there is a seller, and each transaction contributes to the count of total volume. So, for example, if only 5 trades take place in one day, the volume for that day is 5. So if you use TradingView, you might notice that there is an indicator called volume right at the bottom that just gives you a bunch of bars that you're not exactly sure what they are. That's just how many trades took place in that day. So if there's high volume, that means there was a lot of trades entered in that day. If there's low volume, that means not very many trades were entered that day. So volume is considered a leading indicator since it generally is ahead of price action, and it's generally ahead of like the moving averages or MACD or any other kind of indicators where we're talking about. It's a technical analysis tool, which basically means it's visual. It's not really based on current events or anything. It's just you see a number, you calculate something based off that number. So if the market made a strong price movement, then the price of that movement depends on the volume for that period. So if there's a big spike upwards, you'll probably see a lot of bullish volume in the markets. And, the higher the volume, typically the more significant the move. If there's low volume, chances are the moves will be very small. So now there are volatility indicators. These indicate fluctuations in currency pairs or instruments by comparing their current price to historical values. So that basically means if, let's say, one currency pair in the past kind of moved really, really slow, and then for whatever reason, price starts moving really, really fast, a volatility indicator will show you that it's going, hey, price is moving a lot faster than it typically does, which means there's high volatility. And you might have heard this before. When price is volatile, it is very, very, very tempting to enter a trade, but it's honestly a very risky time to enter. Typically, you want to enter a trade when price is not volatile so that when price does become volatile, it's volatile in your favor. A good example of that is there's a news event each month. I'm trying to remember what it's called. FOM. There's one called FOMC.
NFP.
Non-farmers payroll. Yeah. NFP, there we go. And so one example is right before it's released, the information's released, you'll enter a trade while conditions are not volatile, and then the news is released, price explodes, and you take your profit because of volatility. But if you catch it after the news is released, you see prices going everywhere, chances are you're not going to make a successful trade based off that unless you're, someone who knows what they're doing, been doing it for 10 years. So that's why volatility indicators are important. Typically not a good idea to enter a trade when price is volatile. You want to catch it before it's volatile. Then we have momentum. Momentum just determines the strength or weakness of a trend as it progresses over time. Momentum is high when the trend starts, and it's low, and it goes down when the trend is about to reverse. Common examples of this are stochastic, MACD, momentum, RSI. Basically, if it's going from an oversold to overbought conditions, and if momentum is low, its price is typically kind of floating in the middle. Like if you use RSI or the momentum, you'll kind of see that the line is just staying in the middle. It's not going up high, it's not going down low. That means there's just not much momentum going on. And this might not sound useful initially, but when you use it with other confirmations, it's really good indication to know or find pivot points, good place to find potential reversal zones. So all these confirmations on their own don't do a lot, but when they're used in harmony, they can give you some really accurate readings. All right, so do we have any questions over indicators?
I think we're good to go.
All right, how are we doing on time, by the way?
We're good.
Yeah, we're good. We're about 30, 40 minutes in. So, yeah, you can definitely keep going for another 20 minutes or so.
I have a question about the indicators.
Yeah.
So what is your opinion on the indicators that are, like, if you download MT4, you have all the paid indicators and some of them go for like a couple $100. Have you used any of those, and like, what's your opinion on them in general?
Yeah, I think I paid close to $800 for indicators throughout the few years I've been trading. I don't really recommend it. Basically, what they're kind of for is, let's say you sign up with this company's, like a company's education platform. They say, hey, we have our own special indicators and we have a whole strategy based around it. So the indicators that are paid generally only have one application. And to be a successful trader, you want to have a holistic knowledge of how the financial markets react to one another. So they do work. Some of them do work very, very well, but it'll keep you in this box where you're not going to really know what's going on. So I don't know. I kind of mixed views on it. Yes, they work, but no, I don't recommend them, if that makes sense.
Yeah, just use the free indicators and maybe like the scanner and the analyzer in IML.
Exactly. Like, you really don't need anything fancy. And that's actually kind of want to go over next is I actually don't use MetaTrader 4 to look at charts. I use TradingView. Does that look okay with everyone?
Yeah, it looks cool.
All right, awesome. It's gonna let me draw. So TradingView is what I use. If you've never used it before, you're gonna go to the main website right here. You can join for free. Just sign in using your. Oh no, I got drawings on here. You can just use your Facebook to log in. All right, Darren, I remember you struggled the other.
Yeah, so if you want to delete the drawings, like you'll see kind of where it says the screen share button at the top, you'll see whiteboard or something like that. You should be able to click it and press clear, and it'll just clear your screen.
Boom.
Yeah, I don't know how it happens. It happens on some of my calls sometimes. People like are drawing while I'm doing webinar. I have to go.
All right.
I don't know how to turn it off, but I know how to delete it.
All right. So when you're on TradingView's website, you're going to click this button called chart. My goodness.
Okay, guys. Let's get back to it.
You drew that smiley face.
I don't know how to cancel.
Stop that, you people. Naughty people.
All right. So you're going to hit chart right here, and it's going to bring you to the chart view. And if you've never used TradingView before, it's going to look a little different. So what I really like about it is you can customize it about any way you want. I change the colors of the candlesticks. I'm an extremely visual person. So I will get kind of bored. My brain will get used to a certain color scheme, and I'll stop seeing it from a new perspective. The beginner's mind is probably the best view of the best eyes to look at a chart. Because when you're new to it, you see everything individually because you have no idea what you're looking at. If you're doing it for a while, you start to look at it kind of further and further away to the point where it just looks like a blob. So that's why I like to change up the colors here and there. So I want us to go a little bit over like how to use TradingView, because it is a little intimidating at first, but I find it superior to MetaTrader 4. Just with the flexibility and ease you can use it. You don't need to download anything. You can, log in onto different computers. Like I have my laptop plugged into it, and it'll just bring up your charts, your markups, your settings through their cloud service. And it also has a lot of different premium features that you can utilize that MetaTrader 4 does not have. So I guess I'll just kind of start with the basics. In this upper right-hand corner up here is where you can look at different currency pairs, and you can also look at stocks. Like, for example, we can even look at Apple. So it's not just Forex. It's actually pretty much any financial market you can think of. We can look at the US dollar index. So that's another advantage to this. We don't have to connect it to a specific broker because they actually are attached to many, many, many different brokers, which is a huge advantage to TradingView. And now another advantage that I really like about it is the different time frames. It has your basic time frames. Like right now we're on the daily, 4 hour and so on. They have a premium feature where you can actually do custom things. Like you can look at 8 hour, which I really like to use. It's a little less choppy than the 4 hour, but not as slow as the daily. And you can even I even made like a 1 year, which is really pointless because Forex actually hasn't been around that long. So from there, how to add indicators like the one we're talking about. So Joe, like you're talking about moving averages like this. They are really, really powerful to use. The way you add these on TradingView, on the top, there's a button called Indicators. You click that, and this is where you can pretty much search in for whatever you want. Just like MetaTrader 4, they also have premium plugins that are user-made. They also have free ones that are user-made. But you kind of search whatever you want. You got your moving average, you got your exponential moving average, and so on. The indicators I personally use, I use the moving averages to help me with the trend. And then the other indicators I like to use a lot is the Ichimoku cloud, although mine's slightly modified, which again is a huge perk of TradingView. They make it really, really easy for you to make it any way you want, because I know everyone thinks a little differently. And I also use RSI and Momentum because they're very similar, and the slight divergences they have tells you a lot of good information. Does anyone have any questions about the indicators on TradingView?
I just wanted to ask a more general question.
Yeah.
How long did it take you to be able to read these charts? Because I mean, like, I'm still pretty new in like going through the academy. Like, I've really only just started to get into it because we've been really focused on just building the team and helping other people get started. So like when I look at this, I still kind of just see like squiggly lines. Like how long do you think it would take the average person, you know, studying, you know, what's available in IML and then, you know, practicing it themselves before they can like read these charts? Like, what was the process for you?
So initially it took me about a month to get comfortable just navigating charts, you know, knowing how to look at different currency pairs, how to add different indicators. From there, it probably took around 3 months for me to start getting more comfortable to put down like, you know, support and resistance, a little more comfortable putting on trend lines and stuff like that. But from there to actually get comfortable of like looking at a chart and knowing what you're seeing, that's going to take upwards to six months to a year of doing it actively. And it's different for every person. Like, I'm honestly a really slow learner. So when I say 6 months to a year, for me, it really only might be like a month to 3 months for someone that learns really fast. But that was just my experience. And it also just depends on what you're studying. Because one thing, if you don't know like market structure, which is a topic I will go over in the future, like you'll start really be able to recognize like what you're seeing and stuff like that. So for example, like this looks like a bunch of squigglies, but once you're familiar with price action, you'll quickly see that, you know, there's an Elliott wave going on that kind of looks something like this,
Right.
you know, something quick like that.
Okay.
So
cool. We had a couple more questions. Is TradingView easy on mobile? I haven't got a computer to mark charts.
Okay, so TradingView I wouldn't say is ideal for mobile. However, they do have a mobile website. So if you go on TradingView, it'll work on mobile, and they also have their own app. Now I have an iPhone 8, 7, not one of the newest ones. So my screen's kind of small. So when I'm using the TradingView app, it's a little frustrating because like if I go to a pair that actually have like, you know, a bunch of stuff on, when I'm on my phone, it's really hard to like, you know, move all these different trend lines and Fibonacci levels and stuff like that. But if you have like a tablet, like an iPad, it would probably work better. But it's definitely ideal to be on a computer or a laptop because your price data is really accurate and it takes precision. And sometimes when you're on a tablet or a phone, you can't be. But it's just kind of whatever works for you. Like, for example, the guy I learned from the most, Jake Coleman, he uses a tablet a lot. So he got used to it. I just haven't put in the time to get used to using a tablet. So I definitely think you could do it on a smart device.
Cool. So,
yeah, that's all good.
All right. Someone asked a question. What kind of profits are you averaging on a daily or weekly basis? Ballpark is fine. So again, I don't trade too aggressively. I honestly make maybe around $500 a week because that's all I need. And I've been doing that consistently for the past year and a half. I
That's awesome, bro.
So I used to trade really aggressively. I could post some really big profits I had in the past, but that's kind of not what I like to share anymore. I don't like enticing people with huge profits all the time, like I used to. But like in my prime, like I remember closing $5,000 in 1 week, and that was great. But the stress was just unbearable. Stress was so much. Because whenever time I wake up in the morning, I didn't know if I was waking up with $1,000 or waking up with lost $1,000.
Yeah.
It wasn't worth it to me, so I much prefer just kind of going up gradually, making about $500-700 a week. That's really all I need to be saving up right now.
Yeah, it's awesome, man.
Awesome. That's cool that you're still able to make, what most people would make in a job, but you're able to do it, from your phone and still trading very humbly and exercising this type of risk management.
Yeah, Forex is definitely like a really high paying side job. That's how I treat it.
Yeah, it's awesome. Killing it, bro.
All right. So I guess kind of one of the last things I'll go over on TradingView, so everyone's kind of more familiar with its user interface. On the side here, we have this toolbar. There's a few things on here that are really, really useful. The first thing you'll see is this diagonal line right here. This is your trend line. You can draw it down like that, and you'll see mine's purple. Yours will be black. Again, like you can make it any color you want. I like getting fancy with it to edit, modify any of the colors on what you see, whether it's the candlesticks, the background, or what you're drawing. You just right-click it and hit Format, and from there you can enter the exact coordinates. You go to Style. You can change whatever colors you want to wherever whatever suits your fancy. Change the thickness, change the consistency of it, whatever you want to do with it.
Sweet.
And then also one thing that's a little hard to see in the beginning, right on the right hand side, there's this little arrow. You'll have more things on here. Now there's a lot. Probably the only things on here you need to remember is a horizontal line, which is how you draw your support and resistance, like this. And then parallel channels, if that's your thing. I don't use these too much, but I respect them. They're a very good indicator. And then so down here, then we also have the Fibonacci retracement. Now a lot of these Fibonacci things look really cool. For example, like Fibonacci spiral, or even the what else is there that looks really cool? The Fibonacci. Oh, this one gets crazy. Like,
Whoa.
yeah, like, don't get too lost in that. You can use it for fun. Definitely mess around, see if you can find any coincidences. That might be more than just a coincidence. But realistically, all you need in the Fibonacci tab right here is the Fibonacci retracement. So when you do it, when you make your account, it's gonna look like this. But again, you can change it to whatever you want. I like to do it like this, so it's just less visually straining if you're a visual thinker. And then from there, probably the last thing that's really important to know on TradingView, at least in the beginning, is how to mark your trades. So for example, let's say you're entering a trade right here. So right in the middle is your entry. And then this right here, if it's a buy, this is going to be your take profit. So let's say we put our take profit right here and our stop loss. So it's just another way of managing your risk. So we can see that this risk reward ratio is 1.45. So we didn't have to calculate the pips, bust out the calculator and use all the mental effort. We can just visually put it on here going, okay, I think price is going to go up to here, and I hope it doesn't go down this low. And the same thing goes for a sell. You just hit the tab, hit the short position, and it'll be the inverse of that. Just like so. So those are the main things I really like about TradingView. You can do most of this with MetaTrader 4, and hey, like, no disrespect to MetaTrader 4, it's the OG, platform to look at. But I just I like this because it's a little easier to use, in my opinion, and a little more flexible. So yeah, I think that's pretty much all I wanted to cover today. I don't want to go over too much. Definitely excited to go over some more, basic topics in the future and kind of talk about a little bit of advanced topics. But does anyone have any questions of what I went over now, or any questions about more advanced topics that they're thinking of? Let's see, we have,
So yeah, Matthew said, do you follow wick patterns, and can you do a small explanation of an exhaustion wick? I don't even know what that is yet.
So I do do some patterns. For example, looking at dojis, an exhaustion wick. I'm trying to remember off the top of my head exactly what that is. I believe that's, you know what? I should probably cover things that I have a mastery knowledge of.
Yeah. Sweet. Yeah. Sounds good. Cool. Well.
Well.
Whoa.
Thank you, whoever did that.
Yeah, this is so crazy. Matt.
Thanks, Matt.
Does anybody else have any more questions? I think this was awesome. There was a lot of value on this trading webinar for sure, and I'm really looking forward to doing these in the future. It's awesome.
Yeah. Well,
maybe just possibly.
Yeah. Any other questions, guys? I mean, feel free to post in the Forex chat. Jonathan's in there. You can get some ideas of topics to cover, on next week's call and stuff like that. So appreciate all of you guys for tuning in, for, growing with us and learning with us. It's pretty exciting, man. You're killing it, Jonathan. You're a good educator. I saw how you had so many students. So it's awesome, man.
Yeah, thank you guys for letting me hop on, talk about Forex. Like, I get really excited to do this, and it's a good opportunity to be able to do it, in front of all these people, because I really want to help you guys, develop this trading culture and making sure that we're not just here to sign people up. We're not just here to go, say this, say that. I want, we all want this to be a group of traders who are making money off the financial markets and not just through signups. So thank you again, Darren and Amy.
Dude, appreciate it, man. I mean, you're the end result. Most people in IML join IML to be like you, to be able to make 500 a week, humbly trading Forex, managing risk and treating it like a business. And that's why it's awesome, man. Like, it's incredible to think of, how far you were able to come and how much you were able to learn just kind of on your own, and how much, support and effort, everyone else is getting, from a lot of other educators to help them have a much shorter learning curve. So yeah, right on, guys. Hope you have an amazing rest of your Tuesday. We got our opportunity call in 30 minutes. One more question, I guess. What's a good starter account, 500 or 1,000? I mean, I'd typically say like 1,000, but 500 still would work.
If $1,000 is your entire life savings, I'd probably go with 500 though.
Yeah, good call. So awesome. Yeah, once this call closes, bro, it'll, process. You can throw it up on Dropbox, send it to me, or just upload it to your YouTube channel and post it in the chats for anyone who missed it.
Yeah.
And I guess one final question for Jose Luis is, how long do you typically spend training? Trading. Yeah, that makes more
trading. Honestly, not too much. The idea of trading, for at least how I see it, is you want to make it the least amount of stressful as possible. So kind of towards the beginning of the week, maybe Sunday or Monday, I'll spend a good hour or two looking at charts. But after I've kind of gone through a rundown and just kind of have a general idea of what I see happening, I'll check for maybe 20 minutes, the rest of the week each day. And so not very much.
Yeah, that's the whole point of Forex. There's some people who get obsessed with it and they trade 20 hours a day. And that's like the opposite of the whole point of, trading money for money. So you don't have to trade all your time for money. So yeah, awesome, guys. We'll have a good rest of your night.
I just want to say really quickly, if everyone could please do me a favor, after this call, go into our future founders group and spam all of the posts in there with likes and comments, please. So we can just support all the people who we're working with, and all the awesome results that we're getting, and show to everybody else who's being added into that group, the amazing trading culture and team culture, that we have here within our team. So that would be greatly appreciated if you could all do that.
Yeah, right on, guys. Well, let's close it off, Jonathan.
Thank you so much again.
Thank you again, bro.
All right, guys, take it easy.
That was awesome.